It's really not the fact that rates are going up. It's the speed at which rates are increasing. And so, the concern there is that the Fed might, step in and feel the need to do something. But I really don't see this as as a stopping of stocks. Yes, clearly there's a dip right now. We like to buy the dips. All those names that you mentioned, I've spoken at length of those on the show. I love those names. And again, we're long-term investors. So we are not really, even though we're watching the markets every single day, I'm not too concerned with what a stock does in a day or even in a week. It really is for the long term, and our thesis around all those names is a long-term thesis. But again, it kind of just gets back to the importance of having a diversified portfolio. If you were in any of those names, you clearly made some money, probably, most likely, I hope, made some money, and it was time to rebalance. And so that's what we've been doing. We always rebalance. You have a set asset allocation, and whenever things get up to, whenever a stock, an individual name especially, runs up to a certain point, you rebalance, right? And so and right now you should be thinking about incorporating value if you've been on this growth run for a long time. You should be thinking about bonds as well.
Weiss, can you love these kinds of stocks as much as before with a 10-year near or at 1.5%? At one point today, you did eclipse the dividend yield of the S&P 500. Clearly, you have made moves in your portfolio to reflect an unease with where these tech stocks could trade, at least in the short term. Puts in the Qs. You shorted the SMH the other day. You took us through that. Not suggesting those are long-term moves, but it does suggests that you're anticipating some more volatility, if not some more selling within technology.
Exactly right. So, look, whether I agree that these stocks are overvalued and that's why the market's falling or not, I actually think they're cheap, the ones I own. I still don't think the Zooms are cheap. I still don't think the Teladocs and all those are cheap. They're not. They were part of a market where everything went up, when it traded a momentum of price and momentum of fundamentals without regard to valuation. Now you've introduced a metric, and that is valuation because of where rates are. So momentum cuts both ways, so it's cutting back now. There's still some very cheap areas of tech. I own them, but it doesn't matter what I think because the market's trading off the old playbook, which is that rates go up, stocks go down. And it's indiscriminate today in terms of what stocks are going down because the cyclical stocks aren't rising as they did on Monday when the market was getting hit, when tech was getting hit. So look, I think it is time to recalibrate the portfolio. And what I've done is I've gotten rid of what I call are the peripheral names. I haven't touched Qualcomm, I haven't touched Qorvo, I haven't touched Skyworks, but I'm not ignorant of what can happen, which is why I've got the shorts and why I've got the puts and selling the calls.
I feel like we need to have a conversation here about, I feel like we have a difference of opinion, and I feel as though a lot of investors are in these stocks. Are you suggesting, Steve, that the Teladocs, the Zooms, whatever stocks you're specifically talking about that in your mind are overvalued, it's time to sell those? Because Tiffany, to me, is telling a far different story, that if you're in it for the long haul, that you stay in those names and you continue to ride them because those are the stocks of the future. I hope I didn't misrepresent your position, Tiff. I don't think I did. Weiss, nor you. But what about that, Weiss?
For some reason, I just dropped, whether it was you guys or me.
So I do believe it is time to sell them still, even though they've corrected. The valuations are ludicrous. And Zoom, they were the first one on the scene. But I got to tell you, when I get these calls, and while I'm using the Zoom call, I'm getting them from Blue Jeans, I'm getting from Microsoft Teams. It's a commodity product. And sure, they've got great technology, but its technology can be replicated. So we see it time and time again. To me, those were, as I said, relics of the recent past. And the volatility there is going to be immense. I'm not worried about volatility, but I want to see the stocks recover. And they're not going to, period.
Okay.